And Harry, you heard some of those very skeptical investors. John Paulson there at the end saying it's ultimately going to be worth zero. Do you think opinion is changing in the hallowed halls of Wall Street, or are we still seeing basically the big institutions shunning crypto?
Sorry, I was just kind of smiling when I was watching that because if I didn't stay in crypto, then the number of times that everybody told me that it was going to fail, I wouldn't be sitting here today. So we're definitely past that inflection point for cryptocurrencies. I mean, when I got into Bitcoin back in 2013, it was $60 and now it's trading over $50,000. So I think it's not a question of whether or not cryptocurrencies are here to stay. It's what is your blockchain and cryptocurrency strategy now as an investor, and if you're managing investment funds.
Well, how about how is the central bank activity going to affect crypto? Because I've been following Bitcoin as well since 2013 and 2012 even. And at the time, the argument was, these central banks are printing money like crazy. The fiat currency is unlimited in terms of how much we want to inflate our way out of debt. But now it looks like we're at an inflection point there, right? We're getting to a point where the Fed is worried about inflation. We expect them to start tapering and then raising rates and eventually reducing their balance sheet. Is that bad for Bitcoin?
Not necessarily. I mean, Bitcoin and other cryptocurrencies are used as a hedge against inflation right now. So the more money printing that actually happens, the more the value of Bitcoin and all of these things tend to rise. But I like to think of it as an inverse. Don't think that Bitcoin's actually going up in value. It's just the dollar's worth less.
But Harry, hedge against inflation or not, Bitcoin just seems to trade in tandem with other risk assets at this point. That correlation is pretty strong. So how do you differentiate it from any other risky asset?
Well, it's unique. If you're comparing the risky assets such as equities, I mean, equities, if you take a look at a company such as Apple and Tesla, they've, $1 trillion market caps now. And Bitcoin and cryptocurrencies are also trading. I think the market cap combined is over $2 trillion. So risk assets definitely increase in value as well. But if you look at traditional incomes, cost of living has actually risen, but incomes for most people haven't gone up. So it's definitely important to have a bit of cryptocurrency as part of your portfolio, just so that it can work for you. And what's nice about blockchain cryptocurrencies is that you don't have to have a lot of them, whereas trading stocks, with the exception of platforms such as Robinhood, you'd have to purchase about a minimum of $10,000. Like when I got into cryptocurrencies, I only started with $500. So that's the nice thing.
I heard you say two different things there, Harry. One being this serves a role in a portfolio, and this viewing it as kind of a longer-term investment, a store of value, if you were, and then also trading. What do you see as the use case of crypto at this point?
Oh, well, I mean, definitely one of the biggest ones is payments and remittances. So, for example, if you're using a traditional banking system, you can't really do much banking on the weekends. The SWIFT closes. I can't send wires between the hours of 4 p.m. on Fridays to Monday 7 a.m. Whereas something like USDT, USDC, DAI, all of these stable coins, you can send 24 hours a day, 7 days a week. So I would definitely say that's the biggest difference.
What about the lending, the DeFi play? How does that move forward? And how is Bitcoin involved? Because these things seem to be built on Ether or other platforms.
Sure. So that's a great question. So the most exciting part of this bull run, because we're currently in a bull run right now, is definitely that of decentralized finance. So last year, I believe Andre started this project called Wi-Fi, which is Yearn Finance. And it allowed people to take USDT and stablecoins and essentially put them into auto compounders. And what this has done is it's actually sparked a whole wave of decentralized finance. So one of the projects we're involved with is called Tomb Finance. You get pretty amazing yields just from staking US dollar, Phantom, Ethereum, wrapped Bitcoin. So if you have Bitcoin, you can actually convert that to wrapped Bitcoin on Ethereum, Avalanche, Phantom, and essentially stake it on these platforms and earn interest. So I think what you're going to start seeing is a lot of traditional financial companies and even hedge funds. They're going to start using a lot of these strategies to get yield from a decentralized finance, because that's where all the yield is right now.